hanging on to 19,500, up about 50 points on the index.
Good news is that some green has come back on the screen because when the market opened immediately after, we had that bit of a negative tip coming in.
Slide from the top that we are seeing on the Nifty as we speak. It's up 10 points.
At least for the day, the Nifty is in that range of around 19,400, 19,500 odd. But don't just look at the headline index. Individual themes are still playing out, and they're playing out in style. 19,360, 19,370, that was the crucial support zone. Well, it held on to that level. For the Nifty Bank, well, it suddenly lost its weight.
Hello and welcome to Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia Shenoy, and here are all the top headlines for the day. A late sell-off on the Lal Street takes the Nifty below the 19,400 mark. The sensex loses over 200 points. But mid-caps buck the trend with the index gaining over 150 points. And TCS reports the first quarter earnings largely in line with muted estimates. Constant currency revenue growth is flat. Deal wins stay above $10 billion. The company announces an interim dividend of 9 rupees a share. Shares of Nazara Tech and Delta Corp get battered after GST Council imposes 28% tax on online gaming and casinos. Delta Corp sees 1,600 crore rupees in market capitalization wiped out. Meanwhile, multiplex operators welcome the GST Council's clarification that food and beverages sold in cinema halls will attract a GST of 5%. And a CNBC-TV18 exclusive, Royal Enfield amps up its India game plan, gears up to launch 2 to 3 bikes in the next 5 months. Eicher Motors shares race. Sources say the list could include the new 350cc Bullet platform and a new 450cc Himalayan. The 350cc segment is set to see increased competition with the entry of Bajaj Triumph and Hero and Harley. The HDFC stock that has returned a compounded 16.6% over the past 3 decades to shareholders will be traded on the stock exchanges for the last time today, ending an era of wealth creation. All right, here's the lineup of what we have in store for you in the next half an hour. It is a packed show this evening. In Market Opinion, we have Mahesh Patil, the CIO at Aditya Birla Sun Life AMC. In Big Corporate Voices, we have Nitish Mittersain, who's the founder and CEO at Nazara Tech, and Nitin Sood, the CFO at PVR Inox. All right, first up, the day's trading action. The market was doing fine until the last hour of trade. It fell sharply in the last hour. The Nifty and the Sensex ended 0.25% in the red, and the Nifty gave up on that 19,400 mark. Mid-caps continue to outperform, with the index ending close to 0.5% in the green. Banks fell in line with the benchmark indices. Surbhi Upadhyay is here with all the details. Surbhi.
Well, it was a tale of two cities, or a tale of two markets really on the street today. You had the large caps on one hand where there was some negativity, and then there was a relentless mid-cap party. Let me start with the large caps. Now here for the Nifty, it's becoming very clear that the zone of 19,500 to 19,520, this is becoming a resistance area for the market, because 5-6 trading sessions, the market has struggled around this level. Today, the Nifty, in fact, closed below 19,400 as well. So where was the pressure coming in from? IT, of course, there's been weakness in the run-up to the earnings, and that played out today on TCS, HCL Tech, Infosys. The other areas were private banks, where we saw the likes of HDFC Bank, even Axis, coming under some pressure. And metals were a bit of a lackluster area today. In addition, let's talk about oil and gas, because when we came into trade, Brent oil prices were almost touching $80 a barrel. That's about a 2-month high. So ONGC was the best performing stock on the Nifty, but this became an excuse for profit taking when it comes to the OMCs, which have rallied really hard. So IOC, HPCL, BPCL, these stocks were slightly lower. Now I'm coming to the mid-cap party, because this is the bigger story. The kind of momentum is absolutely astonishing. I'll just give some examples. The kind of stock rally that we're seeing. Mankind Pharma, recent listing, up about 8%. Paytm up 6%. Syrma SGS from the electronics manufacturing space sizzling away. And these are stocks that have already run 67%, 60 to 70% so far this year. So big moves coming in on many of these names. NCC, Ashoka Buildcon, J&K Bank. It's a really long list. Of course, the stock headline of the day came in the form of the GST blow on online gaming as well as casinos. Delta Corp, final count was down almost 23%. Nazara had a cut of about 3% as well. We come back to some pretty important cues tomorrow. Of course, the market reacts to the IT numbers, but inflation is also important. The India print, of course, will be there by the evening. And we'll also have of course, the US CPI print. Markets around the world pretty much have factored in at least one more rate hike from the Fed. So as long as the inflation print in the US is not much of a howler, perhaps it will be taken in stride.
All right, Surabhi, thanks a lot for that. Well, in market opinion, Mahesh Patil, the Chief Investment Officer at Aditya Birla Sun Life AMC, says that the recent rally indicates that the market is looking slightly toppish in the near term. He also gives out his top sectoral picks.
Recent rally, what we have seen in the market has probably meant that the markets are looking a bit toppish from a near-term perspective. But really, if you drill down and look at fundamentally, the markets have actually gone on the back of fairly decent earnings growth, what we have seen, last year as well as forecasted for this year. So overall, on the valuation front, if you look at for the Nifty earnings, then Nifty is probably a tad higher than the long-term average. It's not even the outlook going forward. If you look at both our, GDP growth numbers have been upgraded than what we were looking at, say, around 3 to 6 months back. And even corporate earnings growth also looks to be fairly strong and resilient, even in FY24. Few sectors, companies continue to outperform, while we have seen some kind of respondents in the consumer discretionary side. So I think one has to really look at not just the valuations, while they are important, but also the outlook. The defense and the EMS space the narrative there is fairly good, outlook is good. And that's seen the reason why we've seen the stocks doing well. Last leg of downgrades which could happen to this sector, I think it will factor in the whatever slowdown one is expecting because of the slowdown in the US.
Well, on to the second headline now. The earnings season has officially kicked off today, starting with the big tech names. TCS has announced fairly in-line numbers for the first quarter of FY24. The net profits have come in marginally above street expectations, and the company has also announced an interim dividend of 9 rupees per share. Reema's here with the key numbers. Reema, over to you.
Thanks so much for that. So on the whole, it's a subdued quarter, but in line with street expectations. The street was anyway expecting a weak quarter from TCS and the rest of the industry given the macroeconomic uncertainty, and it's been predictable. So constant currency revenue growth at flat, 0%. We were anticipating a growth of about 0.2%, but estimates were even suggesting that there could have been a degrowth. So, there was a fair amount of uncertainty. EBIT margins have fallen by 30 basis points on a quarter-on-quarter basis at 23.2%. This is on the back of the wage hikes that the company has given. The deal wins are strong. That's the silver lining in the numbers. Deal wins at $10.2 billion is up compared to what we had a prior quarter, and this one does not include the BSNL deal. So the street is quite happy with the performance on the deal wins. That said, it's still, not a quarter which inspires growth because there is no growth. In fact, this is the weakest June quarter number growth rates in over a decade, ex of COVID, and even on a year-on-year basis, constant currency revenue growth of 7% is the lowest that we've seen in the last 9 quarters. Up until now, over the last 2 years, the company has been seeing a double-digit revenue growth. But this time, revenue growth on a year-on-year basis has slowed down to 7%. There is weakness in communications. There is stress, which is there in the BFSI vertical. There is some slowdown that we're sensing in retail as well. Life sciences is holding up pretty well. And UK has been rock solid for the company at a 16% year-on-year revenue growth. The rest of the geographies are seeing some rising caution. Back to you.
Okay, thanks a lot for that. Well, staying with the big IT names, HCL Tech has also reported its results for the first quarter. Reema, how did those numbers look?
HCL Tech has reported a big miss compared to what the street was anticipating. Revenues have declined for the second consecutive quarter. Constant currency revenues are down 1.3%, a very sharp margin contraction. This is not something that the street was anticipating. Margins are down to 16.9%, a good 100 basis points lower than consensus expectations and below the company's guided band of 18 to 19%. Deal wins have fallen 25% on a year-on-year basis. They were tracking anywhere between $2.2 billion over the last couple of quarters. It's down to $1.56 billion. Sharp drop in hiring numbers too. The overall headcount declining by 2,500. The good part is the FY24 guidance has been maintained on both revenues and margins. But so it's a very weak set of numbers. But in a way, the street was sensing it because in the last 5 trading sessions, the stock price of HCL Tech went down from levels of 1,200 down to 1,100. So a weak set of numbers. has been something that the street was anticipating, and boy, it's been a weak quarter.
Rima, thanks a lot for that. The third headline today, Nazara Tech and Delta Corp get battered after the GST Council imposes a 28% tax on online gaming and casinos. Delta Corp witnessed 1,600 crore rupees in market capitalization getting wiped out. Mangalam is here to give us more details. Mangalam, over to you.
Well, to tell you the regulation that has come by at the 50th meeting of the GST Council is that they've said casino, horse racing and online gaming will be taxed at a uniform rate of 28%. In fact, for casinos specifically, the tax will be applicable on the face value of the chips purchased, and tax will also be applicable on the full value of bets placed in case of online gaming. And let's say that, taxing the value of chips purchased may impact chip sales volumes, and taxing full value of bets placed in case of online gaming may treat game of skill at par with game of chance. So that's as far as the news is concerned. Now the impact, the biggest of that is on Delta Corp, down 22%, the biggest cut that we've seen in the history of the stock, and it's erased all its gains from this year itself. And there is a threefold impact to that. One, paying 28% upfront at the face value of chips may be a deterrent for people to enter the casinos, as it would enable them to, have a 28% sunk cost itself at the start of betting itself. Secondly, they have a vertical called Adda 52 through which they were looking to unlock their value. But now with online gaming being taxed at 28% and the distinction between game of skill and game of chance being removed as well, that valuation will have a big markdown. And the third big reason, the stock is in F&O ban. So the long liquidators will not have sufficient counterparties to actually absorb their selling, and as a result of which the impact cost is a little higher as well. And that explains the 22% cut that we're seeing on Delta Corp. Nazara Tech has about 5% of its revenues coming in from real money gaming. This was a segment which was fast growing. So capping future growth potential in their real money gaming business is something that's impacting the stock. However, it's come off lows by virtue of the fact that it's just about 5% of their overall revenues right now.
Of this particular announcement, potentially on our, skill-based real money gaming business, which is limited to 5% of our revenues in FY23, will be minimal. And that is what we have clarified. But of course, with this development, which has just happened yesterday, we will of course have to see how this plays out, the relevant impact to the industry and our own strategy there. It's all work in progress at this point of time. Our M&A plans do not get impacted across the various segments that we're operating. Like I said, this particular segment of RMG, we will of course have to review our plans over there. The difference really here is that this particular taxation is linked to the amount that the players are wagering or betting on the skill-based real money games, which does not have sports. There is no entry fee charged, and therefore that would not be this would not be relevant in that case.
All right. Meanwhile, multiplex operators have welcomed the GST Council's clarification that food and beverages sold in cinema halls will attract a GST of 5% and not 18%. The clarification came as the Multiplex Association of India sought the same amidst reports that cinema halls received notices over the GST that they were charging. Surbhi Sutaria is here with all the details. Surbhi, over to you.
Thanks so much for that. So GST Council has clarified the GST rate on food items and beverages in cinema halls will be 5%. Now there was some ambiguity whether it would be 18% or 5%, but now they've gone ahead and clarified that the rate will be 5%. Now PVR was already booking F&B at 5% GST rate. The company was on the view that F&B sold in cinemas is similar to the restaurant services, so that is why they were putting it under the 5% bracket. So there's no real financial impact on PVR. Elara says that even though there is no financial impact, it is still a positive news because it will now save time and effort for the film exhibitors in fighting the litigations against the state. We also spoke with the management regarding this. Let's listen in.
Cinema industry, which is approximately 9,000 screens across the country, post introduction of GST, were always charging a 5% GST rate, which was introduced when the concept of restaurant service was introduced, without availment of input tax credit. You can continue to book your snack. It will continue to be taxed at 5%. So cinema average F&B spend today is approximately 50 to 52% of average spending on a ticket by a consumer. And, there is no reason this number should not be higher. In Western countries, we've seen this ratio as high as 70-75% as well.
All right. Well, moving on, the mutual fund data for the month of June reflected equity inflows of around 8,200 crore rupees, while a record 5,470 crores rushed into the hot small cap space. What stocks did the mutual funds buy and sell? Nuvama has published a report on the same, and Sonal is here with the details on that. Sonal. Thank you so much for that. It's an interesting report. So let me start with what the large cap action has been like, because we've been seeing money moving into mid cap and small caps from the large cap space. But there has been some addition in this space as well. For instance, we've seen large cap additions in the form of Coal India. There's HUL as well, which has been added to the list. Sun Pharma, Tata Consumer and Reliance Industries. These are a couple of stocks which have been added to large cap schemes by mutual funds in the month of June. However, the reductions have come in through from the likes of HAL. The stock, remember, had been in focus, announced the stock split, had been at record high, but from that looks like there has been some profit taking from those levels. Axis Bank, ICICI Bank, they saw stellar moves, and now there has been some profit taking to the tune there. L&T and Bajaj Finance are the other two stocks which are in focus on the back of reductions from the large cap space. Mid caps, of course, they have been in focus. We've seen record high levels on the mid cap index in the month of June as well. So interesting names there as well. Solar Industries, the defense play is something which is seeing a lot of traction. We have Coforge from the mid-cap IT space. While mid-cap, the large-cap IT was not doing well, there has been some addition from the mid-cap IT space. Timken India, the bearing manufacturer, also was an addition, and Shriram Finance is the other name. Top reductions include Indian Hotels, which has seen a stellar rally post-COVID, Max Health, Federal Bank, Max Financials, and Dixon Tech, because now people are talking about elevated valuations in the EMS space, and Dixon Tech is the most expensive in the EMS space as well. In the small cap category, there have been new entrants in the overall buying scenario. We've seen that EQ Lighting, which saw a stellar listing. There is IdeaForge, which is a recent listing. MRPL and Kolte Patel were also added, and BSE also has been an addition in the small cap space. In terms of top additions, we have Aether Industries, TD Power, because a lot of these power names doing well. We have Credit Access, CMS Infosystems, and KIMS, which is Krishna Institute of Medical Sciences. Top reductions have come in from the likes of Blue Star. There's Cyient, a mid-cap IT name again. GSPL has also seen a reduction here. Cholamandalam Finance and Carborundum is also one stock which has seen a reduction. So these are some interesting names that I thought we should highlight as well. Let's slip into a quick break. On the other side of the break, we'll come back with all the other top headlines. Stay tuned.
नई कार तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से नहीं आपको नहीं तो कोई बात नहीं मूर्ति गलतियां होती रहती हैं कोई जरूरत नहीं है चेक करने नहीं
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
Introducer Invicto, the League of Extraordinary.
ज्योति, अब ये बैग क्यों उठा लिया? मम्मी मैं जस्सू के घर जा रही हूँ पढ़ने, क्योंकि कल पेपर है ना हमारा।
बेटा ऐसे रोज रोज किसी के घर में बैठ के पढ़ना अच्छा नहीं होता। उनके माँ बाप क्या सोचेंगे?
मम्मी और मैं करूँ भी क्या? उनके घर वाईफाई है, अपने घर तो स्मार्टफोन भी नहीं है, और आजकल सारा काम मैडम व्हाट्सएप पे ही सेंड करती हैं। आजकल पढ़ाई होती ही मोबाइल पे है, इसलिए जाना पड़ता है मुझे उनके घर।
ज्योति बेटा,
पापा गिफ्ट क्या है इसमें?
खुद ही खोल के देख लो।
ठीक है। वाओ फोन। पापा ये फोन आप मेरे लिए लाए?
मैं कहाँ ले सकता था बेटा, ये तो पंजाब सरकार ने हमारा फायदा किया।
पंजाब सरकार? वो कैसे?
जो 600 यूनिट माफ होने के कारण बिजली का बिल 0 आया,
वही पैसे बचाकर मैंने अपने पुत्र के लिए मोबाइल ले लिया।
पापा जी, ये जीरो बिल सिर्फ अपना ही आया या पूरे पंजाब का आया?
सरदार भगवंत सिंह मान ने पूरे पंजाब को ये तोहफा दिया।
1 साल पहले मुख्यमंत्री भगवंत मान के नेतृत्व वाली पंजाब सरकार ने ऐतिहासिक फैसला लिया और पंजाब के लोगों को 600 यूनिट मुफ्त बिजली की गारंटी पूरी की। पंजाब में 90% परिवारों को जीरो बिजली बिल का लाभ मिला।
Helps beat sensitivity fast. Sensodyne Rapid Relief.
Turn the clock back. Celebrate the golden era of fixed deposit rates. The Great Indian FD Fest.
Welcome back. You're still watching Markets Today on CNBC-TV18. The fourth headline today in a CNBC-TV18 exclusive. Royal Enfield gears up to maintain its position in the 250cc plus segment. We learned from sources that the firm is set to launch 2 to 3 motorcycles in the next 5 months. Eicher Motors rallied over 1.5% today. Parikshit Luthra joins in with more on that. Parikshit, what are you picking up?
Last few days, we have been seeing a large number of launches in the 400cc segment. We've seen interest from Bajaj Auto and Triumph, and we've seen interest from Hero and Harley Davidson as well. Eicher stock has been under pressure. We're now learning that Eicher Motors, Royal Enfield is gearing up with at least 2 to 3 new motorcycle launches in the next 5 months. And these could help the company consolidate its position in the middleweight motorcycle segment. In fact, the new 350cc Bullet platform could come very soon in the next few weeks. There is a 450cc Himalayan which is also in the works, and this could be launched in 3 months' time. What will this do? This will further increase the options for the consumer who is looking at Royal Enfield in the 350 and the 400cc segment. They already have the Himalayan 411 and the Scram 411cc. So now with the 450cc engine Himalayan, there will be 3 400cc segment options that Royal Enfield would be giving. We're also learning from our sources that the Hunter sales will be a big volume driver for Royal Enfield going forward, and Royal Enfield sales of the Hunter will soon hit the 2 lakh mark next month, and this is within 1 year of the launch. So what we are learning that Royal Enfield will not just be depending on the Himalayan to drive its volumes or the 400cc segment, but the 250cc segment and above will be a priority for the company. There will be new launches and Hunter will continue to drive volumes. So let's see. Yes, there will be pressure on RE because of Triumph and because of Hero and Harley Davidson and the pricing. But Royal Enfield is also gearing up to bring new models to consolidate its position and fight back.
Okay, thanks a lot, Parikshit, for that. Well, the fifth headline today, HDFC and HDFC Bank tumbled close to 1%. The HDFC stock traded for the last time on the stock exchanges today. Shareholders of India's home loan pioneer will now become owners of India's largest private sector bank. But let's take a look at some sparkling highlights of HDFC's journey. Abhishek Kothari joins in with more on that. Abhishek.
Well, as you said, all good things do come to an end. And what a journey it's been for SDFC Limited in terms of its performance. So from 1993, that is when Mr. Parekh took over as SDFC on SDFC Limited's board to FY23. The total loans have grown at a CAGR of 20.7%. Total deposits have also grown at a CAGR of more than 18%. More than 1,52,000 crore of deposits they had as of FY23. Yearly income or the total income has grown at a CAGR of 17.5%. If you take a look at the PAT, it's grown at a CAGR of 20.8% from 1993 to about 2023. Net worth has grown at 22.2% CAGR over the last 30 years, and SDFC Limited has been a strong dividend payout as well that they have seen. Its dividend payout ratio has increased from 25% that it was in 1993 to about 1,500% that they had in FY 2022. We don't have the numbers for FY 23. So SDFC Limited has also created massive wealth for its shareholders. The stock has delivered a CAGR of 16.6% that you are seeing from June of 1994 to June of 2023. Back to you.
All right. right, well, thanks a lot for that, Abhishek. Well, Utkarsh Small Finance Bank launched its IPO today, and the IPO had a bumper subscription. It was oversubscribed 4 times on day one itself. Retail investors topped the bidding list by subscribing over 12 times, followed by non-institutional investors subscribing over 7 times. The company aims to raise 500 crore rupees. Abhishek will give us more on that. Abhishek, over to you.
Well, the Utkarsh SFB IPO opens today and closes day after tomorrow. The price band is around rupees 23 to rupees 25 per share. The total issue size is about 500 crores. So the intention of the market cap at the upper end is about 2,740 crores. Valuation wise, FY23 along with the IPO proceeds, it works out to close to about 1x or 1.1x on the lower and the upper end price to book value multiple respectively. A SWOT analysis suggests that the strength of the company is that it has a long presence in the MFI sector, almost about 14 years. Weakness is that write-offs have been aiding the gross NPA ratio. However, slippages have also remained on the higher side. A deposit concentration is plenty. Top 20 depositors form about 21% of the deposits. A bank had issued shares in the past which are higher than the price that you are seeing for the IPO. So it's like 30-31 rupees per share that they had issued versus the IPO price of about 23 to 25 per share. Opportunity is that India remains underpenetrated, so the scope to grow is large, and diversified distribution network. However, the threat is that the cost of funds will start to rise now, and that can impact the net interest margin. Return ratios have largely improved in FY23 alone, given the fact that cost of funds were lower and provisions were on the lower side. Many times we have seen RBI intervening for them, and that has been mentioned in the RHP as well. And one of the example is that RBI had cautioned them against growing too fast in the JLG or joint liability group model. Their previous auditors have been barred by RBI for auditing for next 2 years, and there is no assurance of maintaining profitability in the future. Collection mechanism has been weak. Write-offs have been aiding the asset quality for the company, and they may experience higher NPAs than anticipation in the future as well due to borrowers' reduced ability to repay their loans. Back to you.
Okay, thanks a lot, Abhishek, for that. Well, Pidilite Industries was under pressure after Citi downgraded the stock to a sell rating. The brokerage firm is expecting the earnings growth after FY24 to be in line with about 12 to 13% revenue growth. Mangalam is here with all the details. Mangalam, tell us more.
That's correct, and that's surprising as well, because there's a double downgrade that has come in on Pidilite, and investors are usually very sticky to Pidilite, or the kind of moat that Fevicol brand and their businesses have. But they believe that, a large part of the margin expansion story has played out already on Pidilite. They've double downgraded from buy to sell and cut the target price from 2,800 odd rupees to around 2,200 rupees as well. And the stock is currently around 2,600 odd, recovered from the lows. The reason why they downgraded is that they say that FY24 estimates have already factored in margin expansion. The company usually speaks about a 20 to 24% margin band that they operate in, and any earnings growth beyond FY24 will likely be in line with the revenue growth of the company itself, and that would be anywhere between 12 to 13%. The company guides for or aspires to have double-digit volume growth every year. So maybe 12 to 13% is the revenue growth that Citi has been factoring in. And with all of this, the current valuation of 70 times 1 year forward earnings leaves very little room for any error and looks unsustainable as per them. The stock has recovered from the lows, but there is a double downgrade coming in, citing valuations and all the near term being priced in sort of concerns.
All right, Mangalam, thanks a lot for that. With that, it's a wrap on this edition of Markets Today. Thanks a lot for watching.